Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into Martin Marietta's third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Martin Marietta, a leading supplier of aggregates and heavy building materials, has just released their Q3 2025 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Martin Marietta reported revenues of $1.846 billion for the third quarter, a 12% increase from last year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth is primarily driven by their aggregates business, which saw a 17% increase in revenues. This was supported by an 8% rise in shipments and a similar increase in average selling price per ton. The company's gross profit also rose by 19% to $611 million, reflecting strong operational performance and cost management.
And how did this translate into net earnings?
Net earnings from continuing operations were $361 million, up 22% from the previous year. This was bolstered by a 24% increase in earnings from operations, highlighting the company's effective execution of its strategic initiatives.
EPS performance and analyst expectations. Martin Marietta reported an earnings per share of $6.85, surpassing the analyst forecast of $6.65. John, what does this EPS beat signify for the company?
This EPS beat is a strong indicator of Martin Marietta's robust financial health and operational efficiency. It reflects their ability to exceed market expectations, driven by record-setting performance in their aggregates and specialties businesses. The company's strategic focus on pricing and volume growth has clearly paid off.
How many analysts were surveyed for this forecast?
There were 7 analysts surveyed, and the company managed to outperform their collective expectations, which is a positive signal for investors.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How did Martin Marietta's aggregates and specialties businesses perform this quarter?
The aggregates business achieved a gross profit of $531 million, a 21% increase, setting an all-time quarterly record. This was due to strong pricing and increased shipments. The specialties business also delivered record revenues of $131 million, with a 20% increase in gross profit, driven by higher pricing and effective cost management.
And what about their future outlook?
Martin Marietta has raised its full-year 2025 guidance for consolidated adjusted EBITDA to $2.32 billion at the midpoint. This reflects their confidence in continued demand across key markets and the successful execution of their SOAR plan, which focuses on strategic growth and operational excellence.
CEO's vision and strategic initiatives. Ward Nye, the CEO of Martin Marietta, has been quite vocal about the company's strategic direction. What insights did he share in this report?
Ward Nye emphasized the success of their SOAR plan, which has led to record-setting performance in their aggregates business. He highlighted the company's strategic flexibility and its ability to capitalize on market opportunities with precision. Nye also reiterated their commitment to delivering industry-leading performance and generating enduring shareholder value.
It sounds like Martin Marietta is well-positioned for future growth.
Indeed, with a strong foundation and a clear growth trajectory, they are poised to continue their upward momentum.
Key takeaways. In summary, Martin Marietta has delivered a strong third-quarter performance with significant revenue growth and an EPS beat. Their strategic execution and operational efficiencies have set a solid foundation for future growth. John, any final thoughts?
Martin Marietta's ability to exceed expectations and raise their full-year guidance is a testament to their strategic prowess and market positioning. Investors should keep an eye on their continued execution of the SOAR plan and their ability to capitalize on market opportunities.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Martin Marietta's performance in the comments below.